So you want to buy stocks. You saw that it sold off so much today after the FOMC meeting and Jerome Powell cutting rates. You're like, this is my perfect opportunity. This is godsend. This is my destiny. I am supposed to buy these stocks. I must. Which is valid. I mean, it sold off greatly. You can see it on a line chart. You don't even need to look at candlesticks. This is elementary right here. It sold off. It sold greatly. But let's look at the patterns here. Let's go ahead and dive into our moving averages, which I'm using the 45 EMA and the 200-day SMA, as well as our trusty RSI here as well. So if you are unfamiliar with these moving averages and these in the RSI, what the RSI tell us is that the stock could be overbought or it could be oversold. So overbought means that it's at high levels and we should start selling. Oversold levels are more like, okay, we should buy. So for example, here on QQQs, as you see, we reach peaks right here, and the RSI is telling us, okay, we should sell. First time it was also peaking, but it came back up. So you can't always trust the RSI. But the second time that it came up, it went down and it sold off. That's one example of the RSI working as it should. I don't like using RSI all the time. Matter of fact, most of the time I'm not even looking at RSI. What I am looking at are moving averages. The 45-day EMA shows you the moving price, the price average of the particular period, which is 45 days. So within 45 days, this is the average price that's moving. Now, the SMA, the 200-day SMA is also showing us the same thing, but over 200 days. And it's a simple moving average versus an exponential moving average, which gives us a little less volatility as far as how the stock moves. So it's not as choppy. We want the 45-day to be choppy though, so it shows us a little bit more precise price movement there. And as we see here on Qs, it's bouncing fairly well. So we're like, yeah, well, what we should do is buy, right? Well, no. What we should do is wait for the pullback to this moving average and then a bounce. So you're like, okay, that sounds simple enough, but wait, there's more. So SPY in particular actually broke below the moving average, which SPY and Qs, they both follow each other quite tightly, as you can see. But one broke below the moving average and one didn't. So what I am also waiting for, besides a pullback to the moving average on Qs, is a pullback above the moving average here on SPY. Maybe short term it'd be like, you can possibly look for a long up to the moving average, but I wouldn't touch it personally, because we could see a sell down to here, to this level, back at this SMA, the 200-day. Yeah, it could be that bad. It really could sell off that bad. And that's what I would be waiting for, just to make sure if we're in the clear or not. Again, Qs could just sell off down to this moving average down here, and SPY could sell off down to this previous support range. These are support ranges and oversold levels that we could be looking at when we're looking at buying stocks, if you're not familiar. See how price bounced here at this 568 level, 568, 567, 568, 566. They bounce at these levels. So with that being said, if Qs were to bounce here, not bounce, to sell off down here to the bounce level, the trampoline, as you can think about it, it could bounce off of that price. But then again, we're waiting for Qs to sell off down to the moving average, see what it does there. If it breaks down, could sell back off even worse down to this support range, 505, and bounce there, along with SPY going back down to its previous support range and then bouncing there. That's what I would be waiting for, especially with IWM, how this has been selling off. IWM has been incredibly bearish in the short term as well. That actually, I think, sold off worse than the other ones. I'm honestly not sure. I think Qs was the one that sold off the worst actually today. No, Maybe it was SPY. Yeah, SPY is the one that sold off the worst. Yeah, I broke below the moving average, and this is what we're waiting for, is the gap down to the 200. But on IWM, which is another one that tracks the Dow Jones, but if you're not familiar, we still have levels here that it could bounce off of, looking at the upward trend lines that I put here. But let's get rid of those trend lines. Let's look at the worst case scenario. It broke below the moving average here, which it comfortably was bouncing off of, indicating, you know, a bullish market. Now it bounced off here. This could also drive the market down, just like SPY, right? Yeah, SPY driving down to the moving average, which is less likely than IWM coming down here. IWM most likely, if you had to think about my opinion, IWM is gonna sell off down here to this. It's only $7 less than its current price here in after hours. Could bounce here, and that could provide great momentum for the rest of the market, but most likely it's going to sell off down here to this 213 level, bringing this down to the moving average, the 45-day moving average. This as in QQQ, if you're not familiar. And SPY as well can drag down back to previous support levels, or even worse, if it breaks below, and especially the SPY index could drag back down to its moving average. Now, this is just my perspective. That's how I see it. You could see my levels on the screen. That could give you a rough analysis on whether or not you should buy or sell. Again, if you're skipping to the end of this video just to see my opinion, no, don't buy yet. You want to wait for these moving averages to confirm if it will sell down to them, or if it's going to use previous support levels to bounce, especially on QQQ. I'm going to be watching QQQ very tight because it needs to bounce at that 509 level in order to keep going up. And if it breaks below and starts selling off below, this could drive more momentum for the market to break below and drop to these moving averages, especially on the IWM. IWM is definitely going to be one that I'm watching as well. So SPY, I mean, I'm watching too, but I don't really need to guess as much with SPY. I want to watch to see what Q does and what IWM does here at these levels. So IWM, it's 200-day SMA, and QQQ with its 45 EMA. Those are levels that we need to hold above and show signs of support, as well as if SPY breaks below its previous support of 570, or even if it breaks below 582, this could be bad. It could bounce at these levels. It could bounce at 582. QQQ could bounce at 514 and not go back to 509. IWM could bounce at 216 and not go to 213. It could bounce at 218 and not go to 213. But these are levels that we want to be aware of just in case it happens. And no, you should not buy yet. Do not buy the markets yet, in my eyes, unless you want to do a short-term scalp. If you think that on what's today, Tuesday to Wednesday, so if you think on Thursday it's gonna go up and it's gonna bounce, you know, maybe you're not wrong. Maybe it'll have a short-term bounce, and maybe you can make a little bit of money on a long. It is very oversold, but with that being said, it could sell off even more. Ricky Gutierrez, another YouTuber that I'm part of, their group, he says it's better to be late to a rally than early to a sell-off. So you do not want to put yourself in a position to lose money sooner. Rather, you want to wait for your opportunities to make money on rallying positions, or positions that are selling off very quickly, just like this market here, just by simply being patient and remembering that it's better to be late to a rally than early to a sell-off, and vice versa if you're shorting. So thank you for your time if you're watching this. I'm sorry if I yap too much. I hope that gives you a little bit more perspective on December 18th, 2024, in informing you on a decision. This is just my opinion, and it's not financial advice at all. I appreciate your time and thank you.